going to talk about everyone's least favorite subject, and that is losing. Nobody wants to talk about losing. I'm Arabia Johnson. If you don't know, I've been with RLT for going on 3 years, and this company, these people, has literally changed my life, every single one of you, and I really appreciate you guys. So let's get to it. Disclaimer, trading is risky, but luckily I won't be going over any trading stuff particularly, so we can just skip right over this. All right, so losing, what's that look like? Really, the truth of it, the straight up truth of it is losing starts in your head, right? So we all assume that losing is losing on a trade or seeing a red P&L, but in reality, you start losing the game long before that if your mental state isn't right. And this is something I know from experience. I'm actually going through a tough time with my trading right now, and I don't necessarily want to admit this, but yes, I did blow up my account last week. Took some pretty heavy losses, and I literally just lost focus. So that's what I want to address today and go over the things that helped me the first time this happened to me and things that I lost sight of the second time. So losing has many different faces, and it all comes from fear, right? So the first one being fear of being wrong. That's a huge issue we all face. Like, nobody wants to put on a trade and literally take heat on it immediately. Nobody wants to think like, yeah, this looks totally bullish, and then it breaks down, and then you're like, wait, do I even know anything? What am I doing, right? Like, those are the things that creep up when you're wrong. The second thing that gets in the way is the fear of losing money, right? So this can rear its ugly head in many different ways. The most common one being that you just won't get in, right? You're like, you see the setup, you want to take the setup, it's something that you've seen work before, but I don't know, I'm just nervous. And before you know it, it's gone. And then that runs into the next fear, which is the fear of missing out. So if you had a fear of losing money, you didn't take the trade, now the trade's running without you, the fear of missing out creeps in, and now you're buying the top when you should have bought the bottom, and you were right in buying the bottom, but now it's propelled you into this whole nother state, right? And then the fourth being analysis paralysis, which is just too much going on, too many indicators, looking at the charts and just kind of feeling lost. And because there's so many things going on, some of your indicators are conflicting. You're just kind of like, I'm frozen in fear, and you can't trade that way either. So many fears, so little time, right? I mean, when you think about it, all the things that you have to go through, you're talking about like life obstacles and, your responsibilities and learning how to trade and back trading. And it can really feel like I literally don't have time to reinvent my entire mental state right now. Like, I just need to get through this, push through it, and I'm going to come out the other side. But I'm here to tell you that just short little hacks, little like brain hacks, can really make a huge difference. And it doesn't have to become like this mission of literally reinventing yourself on the fly while you're trying to learn everything else that you're trying to learn, and while you're trying to accomplish everything else that you're trying to accomplish in your life right now. So the fear of being wrong. The first thing that many people like come into contact with when it comes to being scared of being wrong is pattern recognition. It usually stems from an uncertainty in technical analysis. So this can look like, okay, I'm looking at the charts, I'm seeing an ascending wedge. They usually break down, but I don't trust it, right? And we've all been there, like, oh, here's a one white soldier, but I don't know, I'm not sure, right? So you have to commit to a bias. If this is a pattern that you've seen before and it usually works a certain way, there's usually an outcome you can kind of rely on, because nothing's ever going to be exactly the way you need it to be. But if you've seen this play out in certain ways and it's usually been positive, then commit to that bullish bias, even if it is scary, right? But in your mind, already start building a case for the opposite position. So yes, this ascending wedge should break down. It usually breaks down, but I'm seeing, you know, a lot of bearish volume coming in a lot of bullish volume coming in. And, you know, maybe this is the time that it actually breaks to the upside instead of the downside. So commit to the bias, but build a case. Worst thing that happens is that you were wrong, and this is the one time where it doesn't work out, or it'll feel like the one time. It's not going to be the one time, but you know what I'm saying. So if you're still struggling with like, oh, I just don't want to be wrong, I just can't be wrong, take the opposing trade in a paper account. That way, if it works in the way that it was supposed to, then you get the R. And if it doesn't work, well, then you were still right. And that might sound silly, but some people like really, really struggle with this. And I've struggled with it too. Like, I just don't want to be wrong. So if I'm right, then I'm right. And if the trade doesn't work, well, I saw it coming, so I'm still right. So this is going to benefit your flexibility as a day trader. Being able to see something coming in and be like, you know what, this does look different. Maybe I'll try the opposite way. It's going to allow you to flip when you need to flip, but you can't get crazy with it, right? Like, this is only to help you if you really, really, really need help with the fear of being wrong, which honestly, I don't think it's as big of a problem as some of the other fears. I feel like it's not as common, but if I'm one of the people who've struggled with it, then I can't be the only one. So the fear of losing money, this one's key, right? Like, nobody wants to lose money. Nobody wants to lose money. But what sets you apart as a good trader is going to be able to understand that losses are going to happen and to really just cut the ties with money as itself and your trading. So lean into the R system. Like, that's why we use it, and that's what it's there for. I know it's easy to, kind of get wrapped up in the R shout outs in Slack, which are awesome. Like, we need people to keep posting when they're doing good, but we also need people to keep posting when they're not doing so good, because we as a community, there's people on every different path, right? And we're all trying to get to the same place. So honestly, you have to stop letting people's shout outs of the R system in Slack get in your head. Like, first of all, everyone's R is completely different. So you don't know what 5 R's is for someone when they say 5 R's. And you also don't know how long they've been in the trade, how much risk they put up in the first place. So give yourself a break, right? You're only in competition with yourself. You can't trade a $1,000 R with a $50 R mindset. And that can be challenging because, of course, you have a couple good trades or a couple good months even, and you're like, I'm going to scale up. And you have to really look at yourself in the mirror and be like, can I handle scaling up? Am I going to trade effectively the same way with more capital at risk? So be patient and let your R grow with your mentality to avoid costly blowups. There's no reason why you should have to take the hard path if you just stay focused on the process. So tap into your toxic money beliefs. I mean, really, really tap into them. I know personally, I thought I didn't have any toxic money beliefs. Like, I thought, well, yeah, my parents didn't really talk about money, but I was never meant to feel like poorly about having money. But it's so much deeper than that, right? Your toxic money beliefs are something that only you're going to be able to address, but they don't always have to be so drastic as like, oh, my grandfather used to throw money on the floor and like aggressively scream about it. Like, it doesn't have to look so dramatic. It can be something as simple as, my parents didn't really know how to interact with my friends' parents who had more money than us, and things were awkward. Those types of just little things, they get into your head and they get into your soul. And there's just so much to unpack there. We could do an entire session on just that. But get out there, find some books. I'm going to give you some resources and work on toxic money beliefs. It's going to pay off for you, I promise you. So the fear of missing out, FOMO, this is the biggest one, right? This is the one that everyone knows, everyone feels, everyone understands. But I'm just literally telling you right now that for every second that you're not in the market, you are literally missing out on billions of dollars being exchanged. So having FOMO is literally pointless because you've already missed out. You're missing out right now, you're missing out tomorrow, you're missing out tonight while you're sleeping. Like, there's no reason to get yourself bent out of shape about being in and involved and gaining every single moment that you can, because A, it's going to kill your lifestyle and it's so unhealthy, and B, no matter what you do, you can't chase down that money. Like, you just can't. It's just too much going on all the time. All you need to worry about is getting yourself a little slice of the pie. And if you get into the market and you have a great plan and you follow that plan, then you're going to get your slice. You're always going to get your slice. You're going to come out better in the long run, right? So some of the things that you could do to help you with that is build a timing mechanism into your plan. So maybe you can't take a trade for 30 minutes after you exit. That's going to help you with, oh, it's taking off again, smacking the buy, right? Or build a flipping rule into your plan. So you can only flip bearish from bullish within the first 2 hours of market open, or whatever stocks you trade, however that looks for you. You know, like some stocks, I believe AMD, right? Always sells off first thing in the morning, always fades from the open. But then other stocks like Facebook generally fades mid-afternoon. So whatever you trade, figure out the patterns of that, and then literally only focus on that and build a rule into your plan that's going to help you facilitate that. And also, once you have these FOMO rules, you can fine tune them. So maybe you can only flip your bias once a day, or maybe you can only trade 3 times max, win or lose. Like, knowing your patterns, knowing yourself is going to help you build basically circuit breakers into your plan, right? Just like the circuit breakers in the market. We can only go down 5% during the day before a circuit breaker kicks in. You should have that same type of attitude with your plan, and you should have that same type of fail-safe mechanism. Okay, this one's cool. So analysis paralysis. It is time for some chart spring cleaning. Like, literally strip it all back. Get rid of it all. Strip it all back. Only use indicators relative to your strategy. And before you add a new indicator, you must be able to explain how it works to a toddler. Like, this one is so important, because there's no reason for you to have something on your chart that you don't even understand. If you don't understand it, then how do you know if it's really relative and if it's going to work for you, right? So dig into your indicators, figure out which ones you actually care about. And once you get to a point where you can sit down with a 5-year-old and be like, hey, this yellow line is a buy because it's support, something so simple, right? Like a moving average. Until you can say that, don't even think about adding it to your chart. So once you've figured out which indicators you like and which ones give you, the best analysis that it can, pick a chart setup and stick to it for 6 months minimum before tweaking it. 6 months. It's not that long. It sounds like a lifetime, but it literally is not. And I promise you, it's going to go by within a blink of an eye. And then you're going to be like, maybe you do want to add something else to your chart after the 6 months, but maybe, just maybe after the 6 months, you're like, you know what? It's been working. Let's stick with it. So, positive reinforcement. We do have a negative reinforcement rule at RLT. So if you break your plan, you have to take a pain, whatever that pain may be. I've eaten an onion before. I will probably eat one again, but positive reinforcement is a great outcome as well. And the weird part about it is you want to positively reinforce your losses when you've had a good loss. And this is really going to train your brain to stop wincing at a red P&L. And it's going to train you to realize that if you've followed your plan and you've taken a loss, you've done your job. You've done good work today, even if it's a loss, right? So what's the difference between a good loss and a bad win? A good loss is when you're stopped out of a trade that fits your strategy. You did everything right. It just didn't work today. That's a good loss. And I'm sure you guys have heard Jeremy say before, like, that was a wonderful trap. And that's a trap that he's been in, and he's still calling it wonderful, right? Like, that's the type of thinking that you need. Like, wow, yeah, it got me. It was a great trap, right? I followed my plan. I got stopped out. I did my job. A bad win is when you YOLO into a trade against your plan and win. So if you don't take breakouts, well, now you're taking a breakout because you'll be darned if it's going to go up without you, and you actually win on that trade. Bad. That's bad. That's very, very bad, and it breeds really bad habits. So if you followed your strategy and the trade didn't win, you deserve a treat for seeing it through. It doesn't have to be something extravagant. Like, if you like Irish cream cold brew at Starbucks, you get yourself a grande Irish cream cold brew. And that's going to literally take the mindset of like, oh, I can't believe I lost money today, to, you know what, I got in the market, today wasn't my day, but there's always tomorrow. It's going to ease that pain. And with enough easing, you're going to be able to literally become emotionless about your trading, which is the only thing you really need to be successful. A good strategy and zero emotions. Also, learn yourself. You know, trading is a crash course in mastering emotions. And you have to really take a look at your performance triggers and just shut it down. Shut down the performance triggers. So what is a performance trigger? Let's say you have a full-time job and checking your work emails before trading like just puts you in a sour mood. Like you didn't want to be CC'd on this, and now you're CC'd and you have something else to deal with, and now you're salty about it. Don't check your work emails before you trade then, right? It's so simple. Just check your work emails after your first trade or after your second trade. Block out time. Let's say you have a heavy schedule that day. You have meetings. You have a bunch of things you have to do. Knock out a task or two and then block out some time after your tasks are done to day trade. I'm not saying you have to do all of your tasks, but you'll be a lot more relaxed and confident if you're not like, well, I got to hurry up and get this done because I have 6 things to do today, right? Like, of course. And because this is a women's summit, I would be remiss if I didn't mention that if you wake up with cramps and you literally are just a hormonal mess, no, take the day off. That's why we trade. Like, we want to be able to decide when we work and when we don't work. There's no reason why you should be trading when you're having an off-kilter day. And you know what I'm talking about, and you'll know it in the moment as well. So stop shorting your growth. First and foremost, you got to ask for help. You have to ask for help. If you feel like you're drowning, ask. Just ask. It's scary and nobody wants to open themselves up and be vulnerable in that way, but it's completely necessary. You got to do it. And post your charts for feedback. Don't hide behind Slack. Like, literally any one of the moderators, and honestly, a lot of the community would be more than willing. If you don't feel comfortable posting your stuff on the main thread, shoot us a DM. Like, we're literally always here. Just do it. It's not that scary. Just think of yourself as a bullish chart, right? So every dip you take is more tension on the bowstring for the rip into your next level. You need the dips to get more tension, right? Just don't let a tiny dip turn into a full reversal. And if you keep your mind on these fears and you work on literally just reversing these fears and turning them into strengths instead of weaknesses, then a tiny dip won't turn into a full reversal, and I can promise you that. So, real quick, some good reads. Feel free to take a screenshot of this. I think I went over my time a little bit, and I'm so sorry, ladies. So yeah, go ahead, grab a screenshot of this. Each one of these books have either been suggested to me by someone else or something that I just fell into on my own. And they are literally, every single one is amazing. And you can take so much information out of every single one. And I really appreciate you lending me your time today. Thank you so much.